There's a moment in every cycle when everything still looks fine. The headlines are positive, the markets are stable, people feel confident, conversations sound optimistic, plans feel secure, decisions feel justified. And yet, underneath all of that, something has already started to break. Not suddenly, not dramatically, not in a way that immediately draws attention. Quietly, slowly, almost invisibly. Because by the time most people realize something is wrong, the system has already shifted. And by the time it becomes obvious, it's already too late to react effectively. This is the part of the system almost no one focuses on. Not the crash, not the panic, not the headlines that follow, but what happens right before everything falls apart. Because if you can understand that moment, if you can recognize the buildup instead of just the collapse, you don't just understand the system, you see it coming. Most people think financial crashes are caused by a single event, a bad policy, a major mistake, a sudden shock that triggers everything, something visible, something dramatic, something easy to point to. But that's not how it actually works. Crashes are not events. They're outcomes. They are the result of pressure building over time until the system can no longer sustain itself. And that pressure doesn't appear overnight. It builds gradually, quietly, layer by layer, cycle after cycle, hidden beneath what looks like growth. It usually begins in a way that feels completely normal. The economy begins to expand. Access to money becomes easier. Borrowing increases. Spending increases. Investment increases. Businesses grow. Opportunities seem abundant. And as all of that activity increases, something else happens. Asset prices begin to rise. Stocks move higher. Real estate becomes more valuable. Companies expand, markets feel strong, and as prices rise, confidence rises with them. People begin to believe that things are improving in a meaningful, lasting way, that the system is working, that growth is sustainable, that this time is different. And this is where the illusion begins, because what looks like strength is often just expansion. And expansion by itself is not stability, especially when it's fueled by debt, because debt doesn't just create growth. It pulls future demand into the present. It accelerates activity. It amplifies movement. It makes things happen faster than they naturally would. And in the early stages, that acceleration feels like progress. It feels productive. It feels justified. But underneath that progress, something is quietly changing. The system is becoming more sensitive, more dependent, more fragile. Because the more the system expands through debt, the more it relies on continued expansion to sustain itself. It becomes conditioned to growth, dependent on momentum, and less capable of handling slowdown. At first, this isn't noticeable. Growth continues, prices continue rising, confidence remains strong. But over time, the structure underneath begins to shift. The system starts to stretch, not visibly, but structurally. It becomes more tightly connected, more leveraged, more reactive to change. And this is where the real transformation begins. Because as the system becomes more dependent on expansion, it becomes less tolerant of contraction. Even small slowdowns begin to matter. Even minor disruptions begin to have larger effects. And this is where fragility enters the system. Not as a visible weakness, but as a hidden vulnerability. Something that builds slowly, quietly, beneath the surface. And most people don't see it, because they're focused on what's happening above the surface. Prices, trends, headlines. But the real signals are happening underneath. in liquidity, in leverage, in how much the system depends on things continuing exactly as they are. Because when a system becomes too dependent on a specific condition, it becomes unstable the moment that condition changes. And eventually, something always changes. Growth begins to slow, not all at once, but gradually. Returns become harder to achieve. Opportunities become less obvious. Expansion becomes more difficult to sustain. And the system begins to transition from acceleration to pressure. But this transition is subtle. There's no clear signal, no obvious moment where everything changes. Because on the surface, things can still look fine. Markets may still be rising, confidence may still appear strong. But underneath, pressure is building. The system is tightening, becoming more constrained, more sensitive to disruption. And the reason most people miss this is because they're looking for visible signs. Something obvious, something undeniable. But the system doesn't break when things look bad. It breaks when things look stable, but are no longer sustainable. And once that fragility reaches a certain level, the system doesn't need a major shock to collapse. It only needs a trigger, something small, something that under normal conditions wouldn't matter, but in a fragile system becomes enough. This is why crashes often feel sudden, because the visible trigger is not the real cause. It's just the final push. The system was already under pressure, already unstable, already stretched. The trigger simply exposed what was already there. And this is where human behavior becomes a critical part of the cycle. Because as conditions begin to shift, people don't respond logically. They respond emotionally. At first there's hesitation, small doubts, uncertainty. But most people ignore those signals because the trend has been positive, because things have been working, because no one wants to believe that something is changing. But as the pressure builds, those small doubts begin to grow. They become harder to ignore. Confidence begins to weaken, not suddenly, but gradually. And once confidence starts to decline, behavior changes. People become more cautious. They pull back. They hesitate. And that hesitation begins to slow the system down even further, which creates more pressure, which leads to more uncertainty, which leads to more hesitation. And this feedback loop begins to accelerate. Because in a system driven by confidence, once confidence starts to break, everything else follows. This is the turning point. The moment where the system shifts from stability to instability. And from this point forward, the process becomes increasingly difficult to control. Because the same forces that drove growth now begin to reverse. Leverage becomes risk. Expansion becomes contraction. Confidence becomes fear. And as fear spreads, behavior changes rapidly. People start selling. Institutions start reducing exposure. Liquidity begins to disappear. And the system, which once felt stable and strong, begins to unravel. Not because of one event, but because of everything that led up to it. This is why crashes feel sudden, but are never truly unexpected. Because the signs were always there, just not where most people were looking. They were in the structure, in the build-up, in the increasing sensitivity of the system, in the growing dependence on continued expansion. And once that dependence becomes too great, the system reaches a point where it can no longer support itself. That's when the shift happens. That's when the cycle turns. And this is where the biggest mistake happens. Because most people don't recognize the cycle. They don't understand the build-up. They don't see the fragility. So when the shift begins, they react the same way they always do. They panic. They follow the crowd. They make decisions based on fear instead of understanding. And that locks them into the same outcome, over and over again. But the people who understand this system see it differently. They don't focus on the crash itself. They focus on the build-up. They pay attention to the signals that come before the shift. They watch how the system evolves, how it becomes more dependent, how it becomes more sensitive. And instead of reacting at the end of the cycle, they position themselves before it. Because once you understand how pressure builds, how fragility develops, and how behavior changes, you don't need perfect timing. You just need awareness. You just need to recognize the pattern. And patterns repeat. Not perfectly, not identically, but consistently enough to be understood. This doesn't mean you avoid every downturn. It doesn't mean you predict every move. It means you're no longer surprised. You're no longer reacting blindly. You're operating with awareness. And that changes everything. Because the system itself hasn't changed. It still expands. It still contracts. It still builds pressure and releases it. But your position within it can change. Your understanding can change. Your response can change. And that's where the advantage is. Not in controlling the system, but in understanding it. Because once you understand it, you stop chasing what already happened. You stop reacting to what's already visible. You start paying attention to what's developing beneath the surface. And that's where the real signals are. Not in the noise, not in the headlines, but in the structure, in the build-up, in the quiet shifts that happen before everything becomes obvious. And once you learn to see those shifts, the system starts to look very different. Less random, less chaotic, more structured, more predictable, not in exact outcomes, but in patterns. And those patterns are what allow you to move differently, to think differently, to operate differently. Because at the end of the day, the system doesn't reward the fastest. It doesn't reward the most reactive. It rewards those who understand it well enough to move with it, instead of against it. And that understanding begins with one realization. The crash is never the beginning. It's always the result. The real story starts long before that. In the build-up, in the pressure, in the quiet transformation of a system that, on the surface, still looks stable, until it isn't. And once you understand that, you don't just see the crash differently. You see the entire system differently. Because you're no longer focused on what just happened. You're focused on what's already happening, before anyone else notices. And that's where everything changes.